Hello everyone, a very good evening. Welcome to this mini marathon for our JAIIB November 2025. And today we'll be covering the whole module B of our RBWM paper. So we'll be discussing the most important questions along with the explanation. You can download the PDF at the end of the session. I will upload it. You can simply go on the Oliveboard website under the PDF sections, you will get it. So we are going to follow the same pattern. Yeah, right? At one point you will have one question on your screen and 10 to 15 seconds you will have to answer the question, and then we will discuss the correct answers as well as the topic. All right. So please share the video with your other fellow aspirants so that they can also join. And then we will start with the questions. Module D, which is the most important module of our whole syllabus. The maximum weightage is from module B. Around 30-35 mark questions they are asked from module B itself. So let us start with the first question for today's session. Okay. Based on Maslow's hierarchy of needs, which of the following banking services best align with the physiological needs stage? Options are A. Wealth management services, B. Basic services and checking accounts, C. Personal development loans for self actualization, and D. Insurance products for the long term security. Go through the question. We have studied about the Maslow's hierarchy of needs, right? In our unit 5, customer requirements, basically customers, they are satisfied when their expectations, they meet the services, right? The services that the bank provide, they are able to satisfy the customers. The banks can provide better services if they understand the phases of a customer's life and them correctly sell them the correct products. So the Maslow's hierarchy of needs, Abraham Maslow, he gave a pyramid and suggested there are 5 stages of needs in every individual's life. We go through the basic level needs towards fulfillment, self fulfillment. So, at the most basic level, we have the physiological needs. According to the theory of motivation, it is food and water. If we apply it to the banking scenario, the most basic services will be the basic savings and current accounts, right? Above the physiological needs, this is the pyramid as given by Maslow. So, basic level needs are physiological and safety needs. Physiological needs can be the core savings account, a personal accident cover, housing loan, the basic services, undifferentiated. Then we have the safety needs, recurring or fixed deposit products, life insurance products, tax planning, insurance, mutual fund. Social needs, they are the love and belongingness needs, right? Consumer loans, personal loans, car loans, professional development, health policies for self and family. Esteem needs will be the self worth needs, special term deposit product or second housing loan, and self actualization, the highest potential, pensioners loans, retirement loan, senior citizen term deposit, right? So according to the stage of life of a particular customer, we can provide them with the perfect matching so that they are satisfied. All right. Okay, next question. What characteristics define the introduction stage of a product life cycle in banking? First statement, high sales volume and revenue. Second, low sales volume and insufficient revenue to cover costs. Third, high consumer awareness and acceptance. Fourth, time taken for the product to become known to the customers. So, what is product life cycle? When a product is newly introduced in the market, it will take it will go through certain stages. First stage will be the introduction stage. Then the product will enter the growth stage, the maturity stage, and the decline stage, right? When the product is newly introduced, the it will take time for the product to occupy the customer's mind, for the product to reach the market, the customers to understand the product. So the sales volume will be low, and they will be insufficient to cover the costs. The total revenue will be less than the total expenditure on marketing, sales, packaging, reaching out, and it will take time for the product to become known to the customers. Right? So the correct answer will be D, 2 and 4. This is the product life cycle. Then in the second stage, which is the growth stage, the sales volume of the product will increase. The product is likely to break even, so the total revenue will become equal to the total expenditure, and it can also start generating profits. This is the second stage. Consumer awareness will be more. In the third stage, maturity stage, there will be maximization of sales, right? There will be more growth and the sales volume will become highest. Then will come the fourth stage, which is the staleness or saturation, because now other banks will also introduce their own similar product with better features, competition will increase, and saturation of sales will be the result. The profit and the business will stagnate. The customer will become indifferent to the product offered by the different banks. And then, if not managed properly, this can also lead to the decline stage or the death of the product. So, it is important to attend the stage properly, right? To keep the product for the maximum period in the maturity stage. We can bring new improvements, technology, add-on benefits so that the product is continuously it is purchased and used by the customers. Right? Next question. What factors are typically considered by the credit information companies in India for computing a credit score? What is a credit score? When a customer approaches the bank to avail a loan, the bank will the bank will check the identity of the customer. The bank will see the fit and proper criteria. One of this criteria is checking the credit score. The credit score means the past dealings of the customer, the previous credit products that they had availed, like home loans, auto loans, credit cards, personal loans, overdrafts. These are generated by the CICs, right? CICs, they take this qualitative data using statistical measures. They prepare a three-digit number. The score that value varies from 300 to 900. Higher the score, better it is for the customer that their loan will be sanctioned, it will be approved, right? RBI has also made it mandatory for all the CICs to give a free full credit report every year without any charge to the individuals, right? So when the CICs they compute the credit score, typically they consider factors like defaults on the previous credit transactions, high utilization of credit limit, and percentage of unsecured loans. Default means previously on the loans that the customer had taken, the customer made a delay in the payment of EMI, the customer defaulted on the loan, right? Utilization means, let's say on my credit card my safe limit is 20,000 rupees. I am using the credit card way within this limit. Let's say I'm spending only 5 or 6,000. I'm a safe customer. If I'm spending 20,000, if I'm over leveraging myself, again, this will be a negative factor for my credit score, right? Third, what is my portfolio? Does my past credit include only credit cards, or do I have a good mix? a good mix like I have availed a home loan, secured loans, an auto loan or not, right? So these factors will be considered by our CICs. There are four CICs in India: TransUnion Sibyl, Equifax, Experian, and the CRIF Highmark. All right. Okay. Next. What is the consequence of not maintaining the minimum balance required in a current deposit account? So, when we are talking about the liability side of the banks, we have the CASA products and we have the fixed deposit. These are the demand deposits, current account, savings account, and withdrawal deposit can be made anytime. Fixed deposit for a particular tenor. There are certain conditions to be fulfilled in a current deposit account, right? Persons who have higher number of regular transactions, money can be deposited, withdrawn any number of time, any time without giving any notice. Payments can be made for checks and online banking, right? It is a non-interest bearing bank account. A higher minimum balance is to be maintained, right? What will happen if the holder does not maintain this minimum balance? The account will be closed immediately. No interest will be paid on the account balance. Overdraft facility will be automatically activated or a penalty will be charged. So, on the account of not maintaining the minimum balance, a penalty is charged by the bank, right? Penalty will be charged. Other than that, there are charges on the short-term funds or overdraft borrowed from the bank. It is for a continuing nature. KYC norms have to be followed. There's no restriction. So these are the advantages for the depositor. All right. The most important deposit is that it enables the holder to obtain overdraft, the short-term borrowing facility. All right. Okay. Other things are also important from this topic, like what are the documents required for opening the various types of account by the various customers, opening of the current account, how it can be done. This point is also important as per the RBI notification. Let's say a customer wants to open a current account in a bank, but they have also availed loan facility from the same bank or other banks in India. There are restrictions, right? Earlier, RBI had made it mandatory to reject the application for the customers to get a current account that have availed credit facilities in form of cash credit or overdraft, right? But now RBI has made a change in this. It is clarified that banks may open the current account for the borrowers that have an exposure of the banking system less than 5 crore. There's no restriction, right? They can have the current account from any bank, right? Just that they have to inform the bank once their credit facility is going, it becomes more than 5 crore rupees, right? Where the borrowers that have exposure of banking system more than 5 crore rupees, then the current account will be opened with any one of the banks that have given the cash credit or overdraft facility, at least 10%, right? The bank should have at least 10% of the exposure of the banking system to the borrower. All right. So this is also an important point. Next, what is the primary feature of the account number portability as recommended by the Damodaran Committee implemented by IBA? Earlier, if let's say I was living in a particular city, due to my job requirement, I had to shift to another city, right? What happened? I had to close my account here, open a new account there. But the Damodaran committee has made some recommendations making it easier for the customers. So, what is the recommendation? Customers can change their account numbers when they move to a different city, or the customers can maintain the same account number even when transferring to a different branch or city. The account numbers are automatically changed every year for security reasons, or the customer can only transfer accounts within the same city. What is the recommendation made by Damodaran committee? So now, as per the recommendations made, the customers can maintain the same account number even when they're transferring to a different branch or city, a different branch within the same city, or to a different city itself, they can have the same number. So, account number portability has been introduced now. Even when the bank is closing the account for a customer, they should take necessary steps for the continuation. Only in genuine reasons the account can be closed. All right. Now, coming to the savings bank account, what are the requirements for a minor to open and operate a savings bank account? There are some restrictions on the opening of savings bank account. It can be opened only for individuals, and banks they usually do not reject the application form of any individual until and unless it is uncertain to clarify their identity, like that of a Pardanashi woman who is not ready to disclose their identity, right? Other than that, bank account can be opened even for a minor savings bank account, but there are some restrictions. So, what is the requirement? The minor must be at least 10 years old and able to read and write. The account should be jointly operated with a guardian. The minor can operate the account without any supervision if below 10 years. A checkbook facility is automatically provided to all minor account holders. So, a minor who has not attained 18 years of age, they are capable, they will be allowed to open a bank account, although under the Indian Contract Act they are not. But there are certain restrictions, right? A savings bank account in the sole name of a minor can be operated by the minor, provided that the minor is 10 years, minimum 10 years of age, and they should be able to read and write, right? They should be literate, okay? And above 10 year of age. Below 10 year of age, the account can be opened, but it should be it should be operated by the natural guardian, right? So in respect of minors, all right, the minor should be literate in the sense that checkbook facility will be provided, not compulsorily, only on request and on the ground that that person is a literate. To illiterate persons, checkbook facility should not be provided. Other than that, maximum balance to the credit of the account should not exceed at any time 1 lakh rupees. Then, on the basis of their income, either their PAN card or the form number 6061 of the guardian should be furnished. Savings bank account requirement for illiterates. The conditions are important that you need to remember them. Like checkbook facility should not be given, right? And illiterate person, their thumbprint or any other mark can be taken. For withdrawals, they should come personally. Their thumb impression should be attested by a witness. These things have to be done. Joint account of an illiterate can be opened with a literate close relative. Terms and conditions applied there also, right? Joint account. What are the terms and conditions for opening a joint account with two or more illiterate persons? So if a joint account is to be opened for persons and they are illiterate, what are the conditions? The account can be operated individually by any account holder. The joint account holders must be close relatives, and they should operate the joint account jointly or by survivors. The checkbook facility should be provided in case it is a joint account by illiterates, And fourth statement, a note explaining the implications of the joint account in the vernacular language is required. So, when we are talking about illiterates, obviously checkbook facility is not provided, right? So, this statement becomes wrong. Then, when we are talking about the illiterate person's joint account, the operation should be done jointly by all the account holders, not individually. So the correct statement will answer will be 2 and 4, right? All the joint account holders should be close relatives, not two cousins. Operations by jointly by all the account holders. No checkbook facility should be given. Photograph has to be obtained. All of these as agreed upon. The interest rate is reduced by the penalty amount. The penalty is charged separately and does not affect the interest rate. So what happens here? In such cases, the interest rate will be paid at the rate applicable as on the creation of the FD for the period till which the deposit was remained, and from that we will subtract the penalty as stipulated by the bank. So if let's say the penalty that is imposed by the bank is, let's say, 1%, right? The rate of interest that was being paid by the bank is 8%, and the FD was created for 10 years, right? So FD was created for 10 years, rate of interest is 8%, and penalty is 1%. And premature withdrawal was done in the sixth year. So at the time of premature withdrawal for 6 years, the payment will be done at the interest rate 8 minus 1%, that is 7%. All right. So the interest rate is reduced by the penalty amount. This penalty amount, it varies from bank to bank. It differs from bank to bank, and it will be reduced. The interest rate will be reduced by this penalty amount, right? So if the applicable rate of interest for 2 years in the instant case is on 15th October, the date of creation of FD is 5%, penalty is 1%, then the interest will be paid at 4% per annum, that is 5% minus 1%, right? So for the period the FD was maintained, interest rate will be paid subtracting the penalty. All right. What happens under the auto renewal system for the fixed deposit in the banks? The FD is broken automatically and the funds are transferred to the savings account. The FD is automatically renewed for a similar period as the original deposit. The FD is renewed at the interest rate prevailing on the date of maturity or renewal. The auto renewal period and the interest rate are the same across all the banks. So what will happen? What is auto renewal? Let's say my I had an FD for 6 years. After 6 years I have the option that I can take the amount in the FD along with the interest. The bank will make the payment. Either they can send this amount, the matured amount, to my running account, or through a check or cash. Different categories are there. Or they give the customers option of renewal of the FD. Renewal of the FD means that the FD will now continue. It will not be ended on maturity, right? So it depends upon the facility. So in the case of auto renewal, let's say the customer, this facility is given so that even if the customer forgets to give the renewal instruction, the FD will be renewed, and the FD is automatically renewed for the similar period. So if the original deposit was for 10 years, for another 10 years it will be renewed, and the FD is renewed at the interest rate prevailing on the date of maturity. So after 10 years, whatever is the prevailing rate of interest applicable on the FD, the same this new interest rate will be now offered on the renewed FD. All right. So this is the features of the auto renewal of FD, renewed normally for a similar period as that of the original deposit at the rate prevailing on the date of maturity or the renewal. However, this varies from bank to bank. This is done normally. All right. Okay. Consider the following statements regarding the beneficiary eligibility under the CLSS. Okay. From the important retail asset products, this scheme, the Pradhan Mantri Prime Minister's Awas Yojana is very important. Under the PM Awas Yojana, there's the credit linked subsidy scheme. So, the definition of the beneficiary family, the interest rate subsidy, the eligible house space that is allowed, the income criteria, all of these topics are very important. All right, all of these topics are very important. So, accordingly, try to answer this question. A beneficiary family includes husband, wife, and unmarried children. An adult earning member, even if unmarried, can be treated as a separate household if they do not own a pakka house. A married couple may claim separate subsidies if both spouses are earning. Ownership of a pakka house by any family member disqualifies the entire household from the CLSS. So, what happens in the Pradhan Mantri Awas Yojana? Basically, the eligible families or beneficiaries against the validated demand for house, the central nodal agencies they provide subsidies on the loans, interest subsidy. So, economically weaker sections, lower income group, middle income group categories are there. Women household member will be the co-owner or owner of the house, right? Implemented by the Ministry of Housing and Urban Poverty Alleviation to provide housing for all by the year 2022. This was the aim, right? And accordingly, the correct answer for the beneficiary family definition is D, 1, 2, and 4. Married couples together will be eligible for one house only. All right, so beneficiary family will comprise of a husband, wife, unmarried sons, and or unmarried daughters. They should not own a pakka house anywhere in India, in any part of India. The house either in the name of the one family member or the whole family. An adult earning member, irrespective of their marital status, will be treated as a separate household if they do not own a pakka house. In case of the married couple, either of the spouses or both together in joint custody will be eligible for a single house. Right? If they are both earning, then also they will not be eligible for separate houses. Right? So the correct answer is D. Other than that, the income criteria, we have the four groups EWS, LIG, MIG1 and MIG2, right? Income criteria 3 lakh, 3 to 6, 6 to 12, 12 to 18. Interest subsidy that is provided 6.5% and 4%, 3%. Like this, the scheme works. All right, next. Consider the following statements about the interest subsidy disbursement under the CLSS. I also want you to answer one question. There are two central nodal agencies under the scheme. Central nodal agencies. I want you to comment down the two central nodal agencies. Okay, till then, also answer this question. Subsidy is calculated at 9% net present value over a maximum tenure of 20 years. Subsidy is credited upfront to the borrower's account by the primary lending institutions. The primary lending institution can be banks, they can be NBFCs, they can be RRBs, UCBs, state cooperative banks, SFBs, microfinance institution, NBFC, right? So, subsidy is credited upfront to the borrower's account by the primary lending institution. EMI is calculated on the full loan amount, including the subsidized portion. The loan tenure may exceed 20 years, but subsidy is capped at 20 years. So, which of the following statement is incorrect? Out of the four statements, you need to tell me which statement is incorrect. Yes, answer this question. So, the correct answer will be option C. EMI is calculated on full loan amount. No, EMI will be calculated by deducting the subsidy. So, the amount will be credited to the PLI on the borrower's account upfront on receipt of the subsidy from CNAs by deducting it from the principal loan amount of the borrower. The borrower will pay the EMI as per the agreed document rates on the remainder of the principal loan amount. So, whatever is the subsidized loan which is given to the borrower, only on that principal amount that is remaining, the EMIs will be charged. All right, so it is not calculated on the full loan amount, but it is calculated on the subsidized part. Okay, next question. The first bank card was issued in the year dash by a banker John Biggins and it was called. So what in which year the first bank card was issued and what was the bank card called? 1950 Diners Club card, 1946 Charge It card, 1951 the Travel and Entertainment card, 1966 Visa. So if you remember from the credit and debit cards part, the evolution of credit cards, the first bank card was issued in the year 1946 by a banker named John Biggins and it was known as the Charge It card. So what the customers did, customers of the bank, what did they do? They made purchases and they took the purchase receipt to the bank and then the retailer they collected their payment from the bank, so that was charged. Travel and entertainment card was issued by Diners Club. This was the first formal launch of credit card. Then we had ICA and the America Bank America brand, Mastercard and Visa that were introduced. All right, so the correct answer is B. Next, select the correct statements about the prepaid payment instruments. Closed system PPIs are issued by banks for facilitating the purchase of goods and services from any entity but do not permit cash withdrawal. Semi-closed PPIs do not permit cash withdrawal irrespective of whether they are issued by banks or non-banks. All PPIs issued in the country shall have a minimum validity period of 1 year from the date of last loading. I will give you 10 seconds. Read the statements carefully and then answer. Read the statements very carefully and then answer this question. Yes, so the prepaid payment instruments are of three types. Closed system, which is issued by some entity and they can be used for making purchases from that entity only, right? It does not allow cash withdrawal. Semi-closed system that is issued by the entity and it can be used by a at a group of identified merchant locations, right? And open system PPI means it can be issued by banks and they can be used anywhere for any purchase, financial services, anything. And they also permit cash withdrawal, right? So, yes, the correct answer will be B, 2 and 3 only, right? 2 and 3 only. The explanation for the PPIs: closed system issued by an entity for facilitating the purchase of goods and services from that entity only, do not permit cash withdrawal. Semi closed for the purchase of goods and services, including financial services, at a group of clearly identified merchant locations, right? They also, however, do not permit cash withdrawal. Doesn't matter whether they are issued by banks or non-banks. Open system PPIs are issued only by the banks and they are used at any merchant location for the purchase of goods and services, financial services, remittance facilities. They also facilitate cash withdrawal. So it is the only type of PPI that permits cash withdrawal at the ATM or point of sale terminals or the business correspondent. All right, so the correct answer is B. Then, in case of substandard assets, a general provision of dash on the total outstanding should be made without making any allowances. This is the second homework for you. First homework, you need to tell me the central nodal agencies under the PM Awas Yojana. Second, I am giving you, you need to tell me the special mention accounts. How many types of special mention accounts are there? The homework that I'm giving you, we'll be discussing it before in the next session before we start with our module C. All right, so coming back to the question, in the case of substandard asset, what is the provision? 100%, 15%, 25%, or 50%? So this is a very important topic, under the recovery of retail loans. The assets which remain overdue, the principal or the interest payment which remains overdue for certain period of time, they are classified as the SMAs. Then the substandard asset, the doubtful asset, and the loss asset. To be classified as a substandard asset which remains NPA for a period of less than 12 months, right? And provisioning requirement means that setting aside of funds so that it does not, if it becomes NPA, does not reflect badly on the bank's balance sheet, right? So for the substandard asset, a general provision of 15% is to be made in case we do not consider any securities, right? 15% on the total outstanding without making any allowance for securities available. For the unsecured exposure, if any substandard asset is there and part of the overdue is not covered by any security, additional 10% will be required, then it will become 25%. Otherwise, it is 10% only. Okay. Consider the following statements about the substandard asset. A substandard asset is one which has remained NPA for less than or equal to 12 months. This I've already told you. So this statement is correct. It exhibits well-defined credit weakness that threaten debt recovery. Yes. Now there are chances that the bank will have to face some level of loss. It must be classified as doubtful category 1 if it remains NPA for more than 6 months. No. Bank may sustain losses if deficiencies in the substandard asset are not corrected. Not really true. Right? If it enters the doubtful asset category, then definitely the bank will have to sustain the deficiencies. All right. So substandard asset, less than 12 months, it has remained in the NPA category. Doubtful means it has remained NPA for more than 12 months, right? More than 12 months. Up to another 12 months, doubtful category 1. From 12 months up to 3 years, doubtful category 2. And doubtful category 3, more than 3 years. All right, so you need to remember these classifications of the different asset classes. If we take an example, let's say a loan was taken by the customer on a very simple example, 12th of February 2025, right? And the first payment was to be made in June, right? So it will remain in the standard category till 15th of June. Let's say the EMI payment is to be done on 15th of every month, right? So till 15th of June, it will remain in the standard category. Then it will become irregular. It will enter into the irregular category from 16th of June 2025, and for 3 months period it will remain in the irregular or the special mention account category. So till 13th of September 2025, right? Then if it remains NPA for more, if it remains irregular for more than 90 days now, more than 3 months now, and less than 12 months, it will enter and it will stay in the substandard category. So from 14th September 2025, 12 months will be 13 September 2026, right? For 12 months period, it is remaining in the substandard category. If it remains overdue beyond that, then we will have the doubtful category 1. I will write this down. Standard, substandard. No, this will be irregular. This is standard. Second one is irregular, right? Third is substandard. Fourth is doubtful category 1. So doubtful category 1 will be from 14th of September 2026, right? 14th of September 2026 up to 1 year time, right? So 13th September 2027. If it still continues to remain NPA, doubtful category 2, from 14th of September 2027 up to 3 years now, right? So till 13th of September 2030, it will be in the doubtful category 2. Beyond that, it will enter the doubtful category 3. More than 3 years, it remains uncertain and it will enter into the doubtful category 3. All right, so this is how we classify the different loan accounts, right? Provisioning for the standard asset, substandard asset, loss asset has to be made. Loss assets normally should be written off, or if they're for some reason allowed to remain in the books, 100% provisioning should be done. Other than that, in case of the doubtful asset, 100% provisioning for the part of advance which is not covered by the realizable value of security, right? Other than that, for the doubtful category 1, 2, and 3. This is your third homework. Third homework, you need to tell me what is the provisioning requirement for doubtful category 1, doubtful category 2, and doubtful category 3. All right. Okay. Coming to this question, which of the following is not constituted under the Legal Services Authorities Act of 1987? So the Lok Adalats are established by the legal services authorities under the LSA Act of 1987. Which of the following is not one of them? The National Legal Services Authority, the Legal Services Authority for the state, District Legal Services Authority, Panchayat Legal Services Committee. So, the Lok Adalats are established by the National Legal Services Authority, Legal Services Authority of the state, district level, and taluk level. but not by the panchayat, right? The fourth level is the taluk level. Okay, the taluk legal services committee. What is the lok adalat? It is the easiest, cheapest, fastest mode of recovery of NPAs, right? Wherever the loan amount is to be settled by a one time settlement below rupees 20 lakhs, right? And it is not related to any deficiency of services or any criminal misconduct. So, for providing efficient, transparent, equitable legal services, the Lok Adalats are established. Okay. Consider the following statements about the possession procedure. Under the SARFAESI Act, the banks, they are given the powers to recover their loans by selling, taking possession of the security without the intervention of the court. So, what is the procedure followed? The possession notice must be delivered to the borrower or the guarantor. The notice must be affixed on the outer door or a conspicuous place of the property. Within 7 days of the possession, the notice must be published in two newspapers, one in vernacular language. The Act requires publication in three newspapers. So the correct answer is A, 1, 2, and 3. Not in three newspapers, but two. One should be in vernacular language, and the other one should also be in good circulation. A newspaper that is in circulation in the local area where the property is located, right? So if the bank wants to take the possession, they will send the approved authorized officer, right? Before taking the possession, they also have to give a chance to the borrower to come and fulfill their obligations, pay the whole due amount. All right. After that, these steps can be taken. So the correct answer is A. Next, consider following statements regarding appeals under the recovery of debts due to banks. Now, under the RDB Act, the DRTs and DRATs are established. If the banks want to recover their dues, they can either have the powers under SARFAESI, or they can approach the DRTs, or they can approach the Lok Adalat, right? The borrowers can also become the first applicant of DRT. If they're aggrieved by any of the action taken by the bank under the SARFAESI Act, they can make a complaint to the Debt Recovery Tribunal. So the DRTs are established under the RDB Act by the central government wherever, whenever necessary, right? When making an appeal to the DRT against any action taken by the creditor, no deposit needs to be made. But at the time of filing the appeal, let's say the DRT passes the order after hearing both the sides, and the borrower or the bank is aggrieved, they first need to make a deposit of 50% before making an appeal to the Debt Recovery Appellate Tribunal. All right. So, which statements are correct? The appeals must be filed within 30 days from the receipt of the tribunal's order. Yes. No appeal lies if the tribunal order was passed with the consent. True. The at the time of filing appeal, the 50% amount must be deposited. Again, true. The tribunal may waive the deposit. No. The DRAT can reduce the deposit from 50% to 25%. They cannot waive it off completely. So the correct answer is 1, 2, and 3. All right. So the DRTs are also there, DRTs and DRATs. Fourth question for your homework. Who presides over the DRT, and who is the highest officer when we are talking about the DRAT, right? So the highest officer of the DRT and the DRAT, this is your fourth question. All right. Next, two more questions are remaining and then we will end the session. Consider the following statements regarding the minimum retention requirement. Now, when the banks they want to transfer their asset or a pool of asset performing or non-performing to the special purpose vehicle or the ARCs, certain conditions need to be fulfilled, like the MRR and MHP. So, what is the correct answer regarding the MRR? The MRR ensures originating banks retain a stake in the performance of the secured asset. Yes. MRRs for loans with original maturity for more than 24 months is 10%. MRR can be reduced through hedging or sale. It must be maintained on the unamortized principal throughout the life. So, what is minimum retention requirement? It means that banks should have a continuing stake in the assets that they have transferred to the ARC. So either 15% or 10% of the book value of the loans being securitized should be retained by the originating bank. Who is the originator? The creditor, the lender, right? Borrower is the obliger. So the correct answer accordingly will be B, 1, 2, and 4. It has to be maintained on an ongoing basis. It cannot be reduced either through hedging of credit risk or selling the retained interest, right? Ongoing basis. It can be reduced due to the proportionate repayment. Otherwise, the MRR should not change during the life of securitization. All right. 5% of the book value for the loans that have an original maturity of 24 months and less, and 10% that have the original maturity of more than 24 months. For bullet repayments, 10% will be maintained. Right. Last question for today. Evaluate the following statements about the minimum holding period requirement for the loans with original maturity up to 2 years. Now, what is minimum holding period? It means that to show the worthiness of the asset given, banks will have to keep the asset in their accounts for a certain number of installments made by the borrower. Only then, after that, they can transfer it to the SPV. That is MHP. So, what are these installments? Monthly repayment loan required 2 installments, fortnightly repayment requires 6, weekly requires minimum 12, quarterly repayment requires 2 installments. So, actually, this is a detailed topic. Loans that have original maturity up to 2 years, less than or up to 2 years, weekly installments, let me write it down like this. So, 2 years, weekly installments, just a second, right. So, I will write it down weekly, then we have fortnightly, monthly, and quarterly, right? For the original maturity up to 2 years, weekly minimum installments to be made is 12, fortnightly 6, monthly it is 3, quarterly 2. Loans that have original maturity of up to 2 to 5 years, between 2 to 5 years, weekly installments will be 18, fortnightly it will be 9, monthly 6, and quarterly 3, right? For those loans that have original maturity more than 5 years, installments that have to be made will not be counted weekly and fortnightly. Monthly minimum 12 should be made, and quarterly minimum 4 installments should be made, and then the bank will be allowed to transfer the asset to the SPV. So when we are talking about the original maturity up to 2 years, monthly requirement required 2 installments? No. Monthly installments, minimum how many should be there? Three. But here, 2 installments, so it is less than three. Okay. Then fortnightly repayment. Okay, up to 2 years, right? Fortnightly requires six. Yes. Weekly requirement is 12 before securitization. This is true. And quarterly requires two. Yes, so the only incorrect statement is one. 2 installments are not required when we are making the AMIs monthly. We require 3 installments. So the correct answer will be D, 2 3, and 4. All right. Why does the MHP criteria exist? So that the banks, they do not pass on the project implementation risk to the investors, and a minimum recovery performance is demonstrated prior to securitization. All right. So that is all for today. Before we end the session, I have given you 5 questions for homework. You need to tell me the central nodal agencies under the Pradhan Mantri Awas Yojana. You need to tell me the 3 categories of the SMA account. Then, what is the doubtful categories, right? You need to tell me the doubtful category. Okay. What other question was there? Then I asked you the fourth question from this question from the DRT and DRAT, right? DRT and DRAT, the highest officers from DRT and DRAT, you need to tell me. Fifth question that you need to tell me is under securitization, the concept of NARCL and IDRCL. So, what is the shareholding of the public sector banks in NARCL and IDRCL? These are the 5 questions that I'm giving you for homework. Comment down your answers in the comment section, and in the next session where we'll be discussing the module C, I will tell you the correct answers to these questions first. All right, so that is all for today. We have completed the most important questions from our module B. You'll get the PDF. You can download it simply by going on the Oliveboard site. And please like the video, share the video, and use this PDF for your revision. So that is all for today. Thank you so much, and I will see you in the next session with our module C. Like the video, share the video, subscribe to the JIB English medium channel of Oliveboard, and comment down below the answer to these 5 questions. So thank you so much. Good night. Take care, and all the